Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I've covered in the past and I will review them in this video. I have put in timestamps, so use them to get to the names that interest you. I covered Microsoft on the 2nd of March and noted that it was nearing completion of a head and shoulders top. Completion took place over here last week and quite clearly price action fell. The textbook target of this bearish pattern is at 308.92 with the support at 350.64 that can bounce Microsoft higher when tested. On the 17th of March, I said that there was a big drop in Apple over here, and there could be 1 to 3 weeks worth of rebound before resuming the downside. Now, Apple went higher for 1 week before tumbling thereafter, so a bearish outlook remains appropriate, and the textbook target of this rising wedge is at 181.39. In the video on the 23rd of February, I suspected that Totalenergies would enter the bearish resumption phase soon. After 3 weeks of relatively soft rebound, Totalenergies tumbled this week and closed below the 20-week simple moving average. I believe it is now in bearish resumption phase. The textbook target is at 45.95. On 9th of February, I noted that Toyota Motor continues to form a head and shoulders top, and that price action over here was rejected by the Ichimoku cloud, so downside is preferred. Toyota has since fallen, and note that upside was rejected a few more times by the Ichimoku cloud again. I reiterate, closing below the neckline around 2,362 will complete this bearish pattern that has a textbook target massively lower at 954.4. I noted the possibility of Qualcomm forming a head and shoulders top back on 15th of December 2024. Qualcomm has since completed this bearish pattern this week, and the textbook target resulting from this is at 80.59. But watch out for the support at 102.22 that can bounce Qualcomm higher when tested. I showed a rising wedge in Mastercard on the 17th of March. I am now bearish on Mastercard because this bearish pattern was completed on the 4th of April and the textbook target is at 432.4. Now I have to make some corrections about what I said in the last video on the 15th of December about dollar Swiss. I said that it may be forming a head and shoulders bottom on the weekly chart. This bullish pattern is not complete. Price action has developed in a different way on the daily chart. So let me just show you what I mean. Price action has developed into a head and shoulders top on the daily chart. Let me just remove the other two trend lines. So it looks like this. Dollar Swiss completed a head and shoulders top, a bearish pattern on the 3rd of April by breaking below the 87.55 level. The textbook target is massively lower at 0.8309, but I believe we are already halfway there. Price action has overextended below the lower Bollinger, so I suspect the next move for dollar Swiss is going to be higher first as a form of correction, as I've said, pattern completions, the second phase of pattern completion is the corrective phase. This rebound could go slightly above 87.55 before resuming the downside, but in any case, the weekly chart, the bullish pattern on the weekly chart that I've shown you was not completed. I believe it is now no longer valid. We now have to follow the daily chart, which is now completed the bearish pattern. I first covered gold in the video on the 23rd of March and said that it may be forming a rising wedge, a bearish pattern. Now I had to make some adjustments to the rising wedge resistance trend line and shifted it higher just to fit the rejections over here. But in any case, this bearish pattern remains valid and was just completed on the 4th of April. Gold is now technically bearish in my view. The textbook target is at 2,888.25. On 8th of March, I cautioned that the US 10-year government bond yield has potential to form a head and shoulders top. Since then, price action developed in one of the ways I predicted. First, rising to form the second shoulder without breaking 4.5%, then closing below the neckline at 4.1280 to complete this bearish pattern. The textbook target is at 3.446, but note that there are supports at the 4% level and 3.922 as well as 3.603% level that can bounce the US 10-year yield higher when tested. In fact, the 4% and 3.922% may already have bounced the US 10-year yield twice on the 3rd of April and the 4th of April, given the fact that price action has overextended below the lower Bollinger. I highly suspect that the next move for the US 10-year yield is likely going to be higher first, and as I've said many times before, higher from here is just the correction phase of this bearish pattern. It could go back above the 4.128%, slightly higher than this, before resuming the downside, which is the bearish resumption phase. In any case, I am technically bearish on the US 10-year yield now, anticipating a rebound first before resuming the downside. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.